Hello, today we will talk about dividends. Also, we will try to understand for what it created and why people now talking about it. What is a dividend? A dividend is a distribution of some of company's earnings to a class of its shareholders as determined by the company board of directors. Common shareholders of dividend-paying companies are typically eligible as long as they own the stock before to X dividend date. Understanding dividends. Dividends must be approved by shareholders so their voting rights. Also, cash dividends are the most common. Dividends can also be issued as shares or stock or other property, along with companies' various mutual funds and exchange-traded funds. ETFC also pay dividends. A dividend is a token reward paid to shareholders for their investment in a company's equity, and it's usually originated from the company net profits. So the major portion of the profits is kept within the company as retained earnings, which represent the money to be used for companies' ongoing and future business activities. The remainder can be allocated to the shareholders as a dividend. At times, companies may still make dividend payments even when they don't make suitable profits. They may do so to maintain their established track record of making regular dividend payments. The board of directors can choose to issue dividends over various time frames and with different payout rates. Dividends can be paid as a scheduled frequency, such as monthly, quarterly, and annually. For example, Walmart, Chin and Unilever make regularly quarterly divided payments. Companies can also issue not recruiting special dividends either individually or in additionally to a scheduled dividend. United Bankrupt Industry decreed 10 cents per share specific dividend on February 18, 2022. Dividend payment companies. Larger, most established companies with more predictable profits are often the best dividend payers. The companies tend to issue regular dividends because they seek to maximize shareholders' wealth in ways aside from normal growth. Companies in the following industry sectors are observed to maintain a regular record of dividend payments. It's basic materials, oil and gas, banks and financial, healthcare, and pharmaceutical. Companies structured as master limited partnership and real estate investment trust are also top dividend payers because their designation requires specific distributions to shareholders. Funds may issue regular dividend payments structured in their investment objectives. Startup and other high-growth companies such as other in technology or biotech sectors may not offer regular dividends because their companies may be in the early stages of development and incur high costs as well as loose attributes to research and development, business expansion, and operation activities. They may not have sufficient funds to issue dividends. Even profit making early to mid stage companies avoid making dividend payments if they are aiming for higher than average growth and expansion, and want to invest their profits back into their business rather than paying dividends. Impact of dividends on share price. Because dividends are irreversible, their payments typically lead to money going out of the company's books and business accounts forever. Therefore, dividends payment impact share price, which may rise on the announcement approximately by the amount of the dividend declared, and they decline by a similar amount of the opening session of the ex-dividend date. For example, a company that is trading at $50 per share declares a $2 dividend on the announcement date. As soon as the news becomes public, the share price shoots up by rounding $2 and hits $62. Say the stock trades at $63 one business day prior to ex-dividend date. On the ex-dividend date, it's adjusted by $2 and begins trading at $61 at the start of trading session, the ex-dividend date, because anyone buying on the ex-dividend date will not receive the dividend. Keep in mind that this may not happen, but the price should adjust, lowering the share price by dividing the ex-dividend date. While company pay dividends, companies pay dividends for a variety of reasons. These reasons can have different implication and interpretation for investors. Dividends can be expected by the shareholders as a reward for their trust in a company. The company management may aim to honor this sentiment by delivering a robust track record of dividend payments. Dividend payments reflect positively on a company and help maintain investor trust. Dividends are also preferred by shareholders because they are treated as a tax-free income for shareholders in many countries. Conversely, capital gains realized so as the sale of share whose price was created are considered taxable income. Traders who look for short-term gains may also prefer getting dividend payments that offer instant tax-free gains. A reduction in dividend amounts or a decision against making any dividend payment not necessary translate into bad news about a company. It may be possible that the company's management has better plan for investing the money given its financial and operation. For example, a company's management may choose to invest a high return project that has the potential to magnify returns for shareholders in the long run, as compared to the pretty gains they will realize through the dividend payments. So it's the end of part 1. In next series we will talk about funds dividends, are dividends irrelevant, buying dividends, and it's all. So